Welcome everybody to our special Fat Profits webinar today. As the heading says, a review of our latest stock recommendations. We're going to talk you through some of the things we've been talking to our members about in the market and some of the stocks that we're currently recommending and looking at for our members. Today, you're going to have me, Patrick Ganley. So there I am. I'm joined with Edward Allkem, one of our senior account managers. Ed, how are you today?
Very good, Pat. Always a pleasure. And we've got quite a few new stocks to cover today, which is quite exciting.
Yeah, I think it is quite exciting. We've been looking at a watch list of stocks for a while, and we've started to put some in the reports and provided some coverage on that. So it'll be interesting to talk about that today. Just some housekeeping before we get into the presentation. Please be reminded that all the information on this presentation is for general advice purposes. Before acting on any of the recommendations or content, please consult with your financial advisor before doing so. And we must also take you to past performance, which is no indication of future performance going forward. Comments and questions, you will have the ability to put some comments and questions in. You can see the orange arrow here. You can type your questions in during the presentation. If you can't hear the presentation or you're having difficulty with this, please feel free to give us a call in the office, 1-300-88-11-77, and we'll try to sort out the technical issues for you. With all that kind of out of the way, let's get started. Fat Profits market update. I would just like to start to say it's been very interesting times in the market. We've seen a lot going on. So we thought we would start with our services. And one of the main parts of the service that our members tend to like is the fact that we're offering strategy and direction through our daily Fat Chat email, which comes out every morning before the market opens and gives investors a very good overview of what's happening on a macro level around the world in the markets. So Ed, maybe you could just touch a little bit on the strategy and direction and the benefits of the members staying focused and reading this each day.
Sure. The daily research, which is prepared and presented by Angus Geddes and our research team, covers quite a few stocks each day. There is quite a bit of global coverage, but every day we do update members on key stocks that have moved, I guess, the previous day. So it's important for our members and new subscribers to read the full daily report, because we do cover about 4 or 5 stocks each day, and we cover key sectors in the market as well. So it basically provides guidance and direction. Feedback from our members, I mean, I look after members here at Fat Profits, is that it gives me, basically the feedback is it gives me what I need for the start of the day, right? Goes through everything I need to know, and it prepares me for my investing day.
And each daily comes with a theme. So as you can see on here at the top, we kind of put an image in there and we put a caption in there, which kind of sets the stage for what we're really looking for and talking about in that morning note. Where's the morning note come from? Well, it's being led by Angus. Angus is the CEO and founder of Fat Profits. So he's up early. He's up in the morning. He's looking at the markets. He's putting together his commentary. He's then working with the other team members on the research team. They craft that together. They put it in a format that we think is quite usable for members. We use some visuals, text, and some charts in there. So we thought we'd give you an example of what some of the things we talk about in the daily. And Ed, maybe you could talk about this. This was recently in one of the daily notes for the members, and maybe you could just talk about what this is talking about.
Yeah, so basically, we don't really deliver news. I mean, obviously, we give you the facts and the stats, but the team has basically dissected the technicals here, and we've made a prediction that precious metals are gearing up for a very strong performance next year. So we're talking about 2024. Angus highlighted the looming breakout that he sees coming for the gold price, and we've done this for about a year now. Since August 2022, we've been long gold. And if gold manages to break the resistance level at the record high of around 2,050 US dollars an ounce, then the upside count out of the range could be towards 2,300 to 2,500 US level. So it's at a key level at the moment. Recently broke through 2,000 a couple of times. US dollars an ounce. This is very profitable for Australian producers, gold producers, and we cover quite a few of those in our Australian equities and mining reports. So that's our prediction on gold.
And gold's quite interesting at this point in time, and we think anybody looking to get into the stock market or invest or build a portfolio should have some exposure to gold. And one of the reasons we really like the gold price at the moment, and a lot of the stocks that we recommend, is because we think the US dollar is going to be coming under pressure here over the coming months, which is only going to do well for gold and the commodities. So we thought we'd now jump over to silver. Here's another example of what we'll deliver to investors when they utilize the service. And this was another example of silver. And maybe, Ed, you could talk a little bit about this. Very
Yes,
similar to the gold case.
Yes, Pat. So all commodities are covered quite regularly in the daily and also in the research, the weekly research reports. But the silver price here on the chart continues to coil up with a converging triangle range in what is a very bullish technical. So it tends to follow gold fundamentally and technically as well. So a topside breakout could see the 5-year highs above $30 challenged quite quickly. Ultimately, silver could run much higher than that level and could expect a new record high well above the 2011 peak at US $50 an ounce. So this is quite interesting at the moment. We cover it quite regularly. If gold continues to hold support above 2,000, then we expect silver to head towards that potentially that $30 an ounce range.
Okay, we'll move on to the next slide. Again, iron ore. We talk about this in the daily. We make some comments on this. We show you some charts. We give you some idea where we think it's going, and we'll talk about it in a minute. But these comments, which are at a macro level and talking about iron ore, silver, gold, we'll tie that back to actual recommendations and stocks through the reports that we think members should be looking at and potentially buying off of our key themes.
So this is Fortescue basically. The team highlighted several weeks ago that Fortescue had now broken out on the top side above key resistance. This was around September, October. The shares, and then updated in November, that the shares are rallying. All our top iron ore producers have rallied recently, and the spot price has risen accordingly. So we predicted this a few months ago, and we are now testing historic levels, for Fortescue around $26 potentially. So iron ore is headed higher, also on the charts. So technically it's going higher. The demand is there. The fundamentals are there. He's also noted here that I gleaned out one important fact about the structure of China's demand last week, whereby the amount of scrap, typically 20% in a given year, so this is low-grade iron ore, has fallen dramatically. This is keeping upward pressure on demand, as is Beijing's determination to shore up the economy. So this is a huge call for the commodities sector, because generally other commodities could follow, which we follow quite closely, copper and the likes, and a couple of the laggers like nickel. So we'll be following this quite extensively in our daily and weekly research.
Okay, so again, here's another example of some of the things that we do in the morning note to get investors some strategy and direction. Here we have the Australian dollar. Ed, you want to talk a little bit about that?
Sure. So it has recently had an uptick. We had a rate rise recently. Jobs data came out. So technically, the Australian dollar, you can see on the chart there, has had an uptick recently off its bottom line. You see the green line at the bottom of the chart. They're basically the lows. So it's bounced off the lows, and it appears to be heading towards a tight trading range in the upward range of around 65, possibly 66 cents, and it could even hit 67. So that's where we're at the moment. Angus wrote recently that in here in the slide, the Australian dollar has experienced an uptick, with the latter increasingly expected to be lurching towards cuts by mid-2024, while at home, investors fear another possible rate hike in early 2024. So, influenced by the diverging outlooks for the RBA and the Fed, being the US Fed, a breakout above 66 cents would potentially confirm an inflection and an end to the downward cycle. So this is at a critical level at the moment for currency traders. The currency is huge in regards to imports and exports. Australian importers have been paying an absolute premium in recent years. So, anything towards 70 cents would be a relief for Australian importers. Not so great for exporters, but commodity prices do remain elevated. So they'll be quite cushioned in the short term.
I think you make some very good points there, Ed. I think I just wanted to talk a little bit about some of the things that we've been looking at. Is obviously we've been looking at things from a defensive perspective, and when we say from defensive perspective, we like energy, we like commodities, we like gold, we like healthcare, and we believe everybody should be holding a little bit of cash. Here we're going to talk about oil and our positive view on oil in general. But off the back of this, we have a number of companies in the portfolio that we like and a number of companies that we think members should have in their portfolios. So maybe you could just touch a little bit on oil here, Ed.
So this is a key prediction from Angus and the research team. Recently, we wrote to members in the daily. WTI oil staged a powerful upward dynamic on Friday, rebounding off key support at the breakout level. This reinforces the technical case that the correction is now complete. I anticipate a resumption of upward momentum and a retest of the September highs around the mid-90s over the coming 3 months. Back in September, everyone went, all the speculators went long oil. Everyone thought it was going to break through $100 a barrel, and that was, reality kicked in. Obviously, we've got a war on in the Middle East and so forth. A lot of fundamentals at play. So we've all come back to reality, but the fact is the demand continues to grow. The Saudis have cut back a little, but that could change overnight. As we've seen on that chart, it is very reactive to comments from the Saudis in particular, and the output caps that have been put into place. So we predicted the 90s are back in play, and we'll just have to sit here and wait and see if that prediction comes through.
So as we move on to uranium, uranium is one that we really started looking at earlier this year, and one that we thought was going to go higher, and we've been right on the money on this one. And as the uranium supply and demand story plays out, as the world gets more comfortable with nuclear power plants, we know we got a number of countries that are building nuclear power plants going forward. They've loosened up some of the regulation there, but uranium we've gotten into, and we've made a number of recommendations and a number of ways that investors can play the uranium space. So Ed, I think maybe you could just touch on this.
Yeah, Well, we've got two ETFs, one local, one international. Both have risen well over 30–40% in the last 6 months, based on our predictions. We've got a key stock in this area, which is about to bring on a mine back in play in Namibia. And Namibia, I've got a member that actually used to be a political diplomat in Namibia, and he tells me that, you know, the stability of the country, they're very pro resources, they're pro mining, and that stock has also risen about 40% in our portfolio. So it was good to get that from an actual diplomat that spent time in Namibia. So our uranium play has been great, but it's yet to, we believe it's yet to break out to its full potential. So a lot of economies, China, Japan, all looking to bring reactors online. So the spot price hit $75 a pound recently, which is close to those all-time highs. So in the daily, we recently wrote uranium stocks had another excellent day as uranium prices rose last week. The setup for uranium remains promising from a macro perspective, with demand set to rise subsequently in the coming months, years, and a limited supply response. So we are long uranium.
So it's just a classic supply and demand story here. Demand rising, supply not there. Lithium, Ed, I know this is one that you like to look at,
Yes.
and I know you talk to a lot of members about lithium. There's been a lot of interest in lithium and everything that lithium can do with electric cars and things like that. So maybe you could talk a little bit about lithium.
A lot of inquiries. Yeah, we'll keep this brief. It's a big sector at the moment, but the spot price has fallen in recent times. But we just had a takeover of a company called Essential Metals. You know, Essential has been taken over by Develop Global Limited, DVP. Chris Ellison was heavily backing Essential Metals. So that's been a fantastic takeover. So we've ceased coverage of Essential. This is a stock that got, some of our buyers were as low as 3 cents. So this stock got taken over around 50 cents. So a huge reward for members that took the risk. And we have a number of key players in this sector, but we have been cautious recently, purely because there is so much exploration out there globally, you know, in Canada, Argentina, in the Pilbara. Our biggest success story probably in the last decade is Azure Minerals, which is AZS, a stock that we recommended on a midweek alert in January of this year at around 28 cents per share. And we've gone long Azure. We took some profits along the way. The company has a takeover offer of $3.52 per share. It's a huge return, you know, the 1,500% plus. 10 bagger these days is a fantastic return, but this is a huge success story. But there is a lot of interest in Azure. There have been other players buying up the stock. It's risen well over $4 at the moment. So it'll be interesting to see how this plays out. So that firm offer of $3.52 may potentially be taken out next year, and we've sold half of the shares. We've taken profits. Members have been, I've heard some wonderful stories over the phone. Some members have made an extraordinary amount of money out of this stock. And we'll touch on one other lithium stock very shortly, but this is a key sector. We will be covering it extensively in our reports. And we keep members updated quite regularly.
Thanks for that, Ed. And just to give investors a better view, we just don't talk about commodities, oil, gold. We also focus in on some other sectors and some other areas in our strategy and direction. And here we've got some comments on consumer staples. Ed, can you just give us an update here?
Yeah, so every day we cover all sectors, but yeah, the commodity space is quite huge in Australia, as well as financial services. But recently in the daily, we updated some comments here on consumer staples. You know, 0.8% was the biggest underperformer of the day. So as Woolworths, -1.2, Coles -0.8, and Treasury Wine Estates, which is another stock that we cover, -1.7% with a decline. So this sector is under pressure at the moment. Bricks and mortar retail, rising rents, wages, supply chains, inflation, so forth. So the equity raising, referring to Treasury Wine Estates, is currently an overhang, but this should gradually fade after the offer closes late this week. I expect a positive catalyst to come in early 2024 from Beijing, likely dropping wine tariffs. So this is a very good opportunity, you know, for our members in particular. I know the rights issue, the actual rights went off the charts. People just buying the rights just so they can get involved with the capital raising. So we'll keep members updated with this particular stock and also in this particular space as well. Now here's another one that we wrote about recently, Droneshield. So we know there's a war in the Middle East and obviously in Ukraine. The cash receipts that this particular company is receiving is quite phenomenal. It's highly speculative, but again, it's not one that we cover in our preferred list of stocks. So it's not in the Fat Profits portfolio, but we do cover these stocks in our daily research. So that's why I always say to members, read the full daily, even if you just focus on the Australian part. We do cover 5 or 6 stocks each day and obviously update on all the sectors as well. But we recently wrote about Droneshield that it surged 9.5% one trading day. And the update from the company showed that the counter-drone company hit a record cash receipts of 62.9 million year to date. This is huge for a very small company, a 4-fold jump on last year. Droneshield has broken out of a triangle range technically, which raises the scope for further upside in the coming months. So again, this is a stock that has been quite volatile on the charts. They had a capital raising early this year. Share price dropped accordingly, and they're looking to trade in a tighter trading range. But the fact that they're bringing in receipts of over 62 million means that they're actually starting to make some serious money.
We spoke about gold earlier, and we spoke about the theme and the direction of gold, and I said we'd tie that back into actual recommendations. We did that here with a company that we've liked for a while, a company that we've recommended to our members and we still like, and it's been performing very well as of recently. Ed, maybe you can just talk a little bit about Red 5.
Yeah, so yeah, if you go back 6 months ago, members were a bit nervous about this one because they pulled their second capital raising in the year. And the capital raising was at 13.5 cents. So we recommended to members to take up their entitlement offers, which is what we do with every capital raising, but we don't always take up the entitlement. But in this case, we did. So back in August, Red 5 for the day, it was up 2.6%. It released some outstanding USA results from drilling at King of the Hills, KOF, which is their mine production there. The assays have the potential to deliver an upgraded resource, and with this extend the already long life of KOF. This is a mine that will go for over 15 years, probably even longer. And they're starting to produce, their infrastructure ready, and they're rolling out basically pure gold now. So it's in cash mode. Red 5 is holding above the historic 2018 breakout level at 12 cents. Near-term resistance is being tested at 20 cents, and a topside breakout could see Red 5 inflect higher back into the 30s. So this is back in August, and that's exactly where the stock is now. It's been trading around that 32, 33 cent share mark. So if you bought this back in August, based on this comment alone, you'd be up about 35, 40% on that trade. So this is a small gold producer, long mine life. It's infrastructure ready. They've raised the cash they need, and this is a stock that we have in our mining portfolio.
And just to tie that back, to get value out of the service, you only need a couple of these stocks that we recommend that you buy. And, the cost of the membership is pretty much paid for on some of these recommendations. And I know you wanted to talk a little bit about Beacon Lighting. This was another example of a stock we don't cover. We did put a traffic light on this company. We weren't ready to buy it at the time. However, we did highlight it in the daily for investors.
Yeah,
And as you said, they should be reading the daily because, we do cover stocks in there, and sometimes stocks that we just don't have a buy recommendation on at the moment.
yeah. Members are recommended that if they like what they read and they do their own research as well, they might add it to the watch list, and perhaps one day we'll put a buy on the stock, or they can perhaps make a decision and go buy it themselves. But this is a stock that went crazy during the pandemic. Everyone was staying at home, renovating their own properties, and the stock went from like 30 cents to $3, which is quite ridiculous. But the business is quite solid. So we basically just wrote a note because we reviewed it from the day before. Beacon Lighting ticked up 1.6% higher, while a wave of DIY demand amid the pandemic has faded, and it has due to inflation and cost pressures. But the small cap has carved out an interesting niche in the lighting segment, offering energy efficient solutions, right? So Beacon Lighting remains in a corrective phase after hitting the high of above $3.20, only a breakout above $2, accompanied by convincing follow-through price action would confirm an inflection. Further ranging consolidation cannot be ruled out. So the $2 range is what it's recently hit. It's a solid business, pays a dividend, could be a portfolio stock if you perhaps had a larger portfolio and you're looking to add a bit of variety. So these are just some of the examples of stocks that we update daily.
Okay, Allkem.
Yep, Allkem. Okay, so this is a company that we've been covering since 2010. We initially got into this stock. We actually got in much lower than on that chart, Pat. We got in at about $1.10, I believe. I've been here since 2011. I clearly remember that this stock back in 2010 was trading around $1. So we've ridden the highs. It is the #1 lithium producer in Australia. It's infrastructure ready. It's got contracts well in place. The spot price of lithium has affected this stock technically recently, but there has been some support around that $9 mark. We have a hold on this stock. We have taken profits along the way. There's a deal there with the US giant, which is still playing out. But yeah, this price at the moment of around $9, we're holding, but there has been some price action there. So this has been a long-term hold for us. But if that lithium spot price starts to tick up again, this could be a good turnaround story going into 2024.
Now that we've covered a lot of the strategy, direction, the daily email, we thought we'd get into some of the latest stock coverage that we have. But before that, we just wanted to give you a little bit of a snapshot as to when you log into the website, how you can find some of these recommendations. So Ed, maybe you could just talk a little bit about this slide for investors.
Yeah, we keep it simple. We get new members signing up, quite regularly on a daily basis. So we try and keep it simple for them to follow. We don't give you a database of 2,000 stocks to go through and then, select one or two. So we are stock pickers. And you can see there on the right, new recommendations. You can go into the website, click new recommendations. They're archived for about 3 months. So if you've been on a holiday or been busy, you can go back in and see which stocks we've updated over the last couple of months. We sort of rate them in core or speculative. Core are generally portfolio stocks. Speculative are designed to add a bit of variety. We cover Australian stocks, industrials and mining stocks. A couple of examples there in the list. Allkem that we just spoke about. Air New Zealand, we've got quite a few New Zealand stocks in the portfolio. Spark New Zealand as well. Well diversified. We've got some coal stocks, some agricultural stocks as well. International stocks across the UK, US, Japan, China, and Europe as well. We cover extensively as well. So very simply, we advise members which stocks to buy, when to hold, and when to sell. We also take profits along the way. We provide sell half recommendations, and we also provide traffic light reviews, which we went through a couple earlier, and we'll go through a few very shortly as well. Our returns, Pat?
Well, I think it's interesting. You know, we've been in business 23 years now, so we celebrated our 23rd year in business, which is quite an achievement. And as you can see from this chart here, or this slide here, annualized return since inception, 1 October 2000 to 31 May 2023, 16.85% compared to the All Ordinaries Accumulation Index of 8.04. And the 1-year annualized rolling return, 1 May 2022 to 31st May 2023, 10.97% compared to 3.63%. So we publish these on the website for investors to have a look at. Again, this is a hypothetical portfolio. We don't have cash tied to this, but we have a formula on the website that you can look at as to how we calculate these performances. So when we make a buy recommendation on a stock and we put it in the portfolio, we track it and we have these numbers independently verified. So we put them together, they're checked, and we publish them to the website for members to see. So we encourage you to go have a look at the website and look at the performance numbers that we have up there. Now we'll turn to a stock that we've really been looking at for quite a long period of time now. It's a very good company. The company was trading at a level that we thought was a little bit too expensive to get into. Obviously, we like to buy things as cheaply as we can. We pride ourselves on being value investors and looking for the right times to enter some of these stocks. This one now has come on the list. This is now a traffic light. The company is called Xero. Ed, can you just give us a little bit of an overview on this slide here?
Yeah, the stock was getting ahead of itself recently, but it has cooled off. I mean, obviously Xero is an accounting and business software company from New Zealand, and it's obviously listed on the ASX. Cloud-based accounting software, 3.3 million subscribers. They cover areas of payroll expenses, workforce expenses, projects, and management. So its numbers are consistently rising. That's the attraction to the business. We like companies that grow over time. This is just a snapshot from its Foxglove Studios dashboard. A couple of numbers there, but you can clearly see that Xero, its first half H1 FY24 balancing growth and profitability chart. You can clearly see there that the positives, you know, the EBIT there of $206 million. That's 100 million up on the previous year. Free cash flow, 106 million. So they're up 91 million from the previous year. So operating revenue up 21%. So these are the companies that we like to review. Companies that are organically growing, that have earnings, they're making money now. They've got some free cash flow. So for a long period of time, this company was not making money. So now it starts to get interesting, and we'll continue reviewing this stock for our members. It did get a bit of ahead of itself recently, got up to well over $120 a share, but it's come back to reality now. So we're starting to take a closer look. It is good to buy stocks on the way up, but not when they've broken out to the upside, because in this market, the market that we're in today, stocks do come back to a relative average level, which it's where it's at the moment. So we just want to see if there's any further downside, and then we may consider whether we add this stock to the portfolio or not.
Another company, healthcare. We spoke a little bit about the fact that we do like healthcare at the moment. This is a company that a lot of investors would be familiar with, Resmed. We've recently initiated coverage on this stock. We have not put a buy recommendation on it yet, but we have highlighted it in the reports to the members. We're watching it very closely, and we're waiting for the right time to put a buy recommendation on this company. You can see financially it does very well, and maybe Ed, you could just give us a few comments about Resmed.
Yeah. So basically, it's a healthcare technology company as such. So it's global digital health, cloud-connected medical devices. Basically, it looks after people that suffer from sleep apnea, chronic diseases. So they're medical devices, basically. It's a growing sector. You can clearly see there from 2022 to 2023, these numbers are organically growing. They had an outstanding August-September reporting season result. The numbers are all positive. The company's consistently growing. They do spend quite a bit on development and research as well. But from a technical perspective, the company has come back to earth. And this is why we don't chase those rallies. You can clearly see there it's had a fantastic run since the pandemic. And it has come back to relative levels. So now the analysts are getting interested. They're starting to do some research on this stock, and we have done the traffic light report, which is traffic light means review. So we reviewed the company, but we haven't put an outright recommendation on the stock as yet. So it's back at interesting levels. It's back at valuation levels. It's one that we'll continue to update members in due course.
And we'll touch on some retail. Ed, could you talk a little bit about Universal Store?
Yeah, so generally bricks and mortar. It's a popular store amongst, especially now towards Christmas, mum and dad's gift vouchers for the kids, but it generally covers the top end of the market. So it's not cheap. It's got its niche, a bit like sportswear brands and luxury brands. They've got their niche. They've got their top 1% of the market, which keeps them going. But they're a tightly run store. I actually remember when this company actually opened their first store. I'm pretty sure it was around Hurstville, Sydney, or Chatswood, and it was quite expensive when I went through the doors. But they do have the key brands, Lacoste and the likes, just to name a few, Levi's. So we've done a review on the company, and we've had a look at the numbers. In this inflationary period, they seem to be managing their business quite well. We go back to Beacon Lighting, which they seem to manage the fundamentals quite well. They are also an importer of goods as well, so the Australian dollar doesn't help these types of businesses. Rising rents in their bricks and mortar stores. But there's a lot of positives in this balance sheet to look forward to. It is an income stock as well, but it's one that we've just stumbled across. We do want to add a bit of variety to our portfolio. It's a well-run business, but we are monitoring the stock from a technical perspective as well, because this stock in the past has, again, hit the highs and it's come back to an average trading level. So, we'll do some more research on this stock, and we'll just move on to the next slide. You can see on the chart there.
The company's been growing, Ed. It's just opened up another 8 stores, so we do like the growth profile of it. But as you can see from the chart, it's come down a bit. That's why we've gone again with a traffic light to try to get the timing right on this particular company as to when we want to enter it.
You've also got to be careful when retail stores open more stores, Pat. They're generally trying to keep the numbers up, right? So new stores cover poor performing stores year on year. So that's something the analysts take a very close look at. So you look at stocks like Lovisa, for instance, and Adairs, and some of these others that have launched on the ASX that they rose very quickly from nothing, basically, because they just kept opening stores. So the numbers kept growing, but at some point it comes back to a relative fundamental level, and that's where this stock is right now. So those 8 stores will cover some of the poor performing stores, which they may remain to keep open or close in these inflationary environments. So, but it is a fairly well run business. It's a top retailer. here in Australia, and we'll keep a close eye on this stock for members.
Okay, Universal Store, traffic light, waiting for the buying opportunity. Well, talk about a stock that's been in the news, out of the news, up and down. We're starting to get a good look at this one. This is in the financial sector. A lot of investors may know of it. It's called Block at this point in time. Ed, I know you're quite familiar with this space, buy now, pay later. This stock has tracked down recently. It's drawn our attention, but let's just look at some of the highlights here because the stock has started to move higher again.
Yeah, most people know it as Afterpay. Had a stellar rise in recent years, and then obviously merged to be formed as Block SQ2 is the stock code. So it's obviously a fintech business. It has an ecosystem, managed payment, buy now, pay later. Also covers POS, which is point of sale, and it's a big provider of earnings for e-commerce stores. It's obviously a financial services company. So shares surged over 25% in Q3. Net revenue surged 24.4% and reached 5.2 billion, while gross profit rose by 21% to 1.9 billion. So the numbers now are starting to look interesting. It's potentially starting to make some money. Also, you can see there growth in transaction fees. That's how they make their money from Cash App, card, and instant deposit and interest earned on customer funds, and revenue from other financial products as well. So they're also cryptocurrency is sort of coming in as a possible part of this business through Cash App, Bitcoin related activities. So that could be a whole new market for this particular stock. So we're keeping a close eye on that. So just moving on to the charts again, Pat. Now it's come back again to a relative interesting level. We missed that drop recently back in October, but we're now starting to look at this particular stock from a portfolio perspective. That orange line in the middle there. So we want to see if we can get back to that average share price first, and then we'll consider. We are looking at some technology companies for the portfolio, so it's just all about timing with these stocks. So we'll continue to monitor those fundamentals, and we'll consider possibly adding this stock to our portfolio for members.
And as we've gone through, we've spoken about a lot of different sectors. We've spoken about needing cash. We've spoken about gold, commodities, energy, financials. And one of the things that investors need to really get their head around is, how's your portfolio positioned? What are your sector weightings? How do you decide which stocks to buy, and how much do you buy of each stock? So, one of the things that we can help you with when you become a member is to talk to you a little bit about this and try to guide you a little bit on some of the stocks we have, how we kind of position them. We run a wealth management business, so we run managed account, professionally managed accounts aside from the research side of the business. So we have some insights into sector weightings and how portfolios should be positioned. So maybe, Ed, I thought maybe you would talk a little bit about the Fat Profits service. We call it a Fat Profits portfolio review, where if you join Fat Profits and you've got some existing stocks at the moment, or if you accumulate stocks over the period of your membership and you want to kind of send them over to us, we'll have a look at them. We can talk to you about them. We can give you a little bit of direction on them. We'll be mainly focusing in on the companies that we cover and we recommend, but typically most of the stocks we have, if people have exposure to stocks now, they have some of the stuff we have. But when you become a member, if you use the service, obviously you'll be accumulating stocks that we've recommended. So Ed, maybe just over to you on this.
Yeah, just on the next couple of slides, just a snapshot of reviews that I've done in the past for members. So typically the portfolio review service is an upgrade for our existing members. But some new members, when they join, if they join on the Platinum service, we'll offer them an annual portfolio review. So it is our top level membership. But typically when members ask for a portfolio review, we ask them to upgrade their membership for compliance reasons as well. And they give us permission to discuss their portfolio. So it is another service that we offer. And then members go back, they review the suggestions that we've provided, and then they go away and make those changes themselves. So, you know, a lot of these reviews we do before tax time because investors are looking at profit and loss situation. So they're looking to cut some stocks and possibly pick some up after, you know, in the new financial year for capital gains purposes. So we give them some suggestions on some stocks there. There's a structure, how to structure a portfolio, snapshot there. So again, this is one from the past. Can't dwell into it too deeply at the moment, but it's got some gold stocks highlighted. So this member, I'm assuming, and based on our recommendations, has held on to those gold stocks, and they've come along quite well. Evolution there at 265, it's about 380 at the moment. Gold Road, so this gentleman was heavily weighted in gold, for example, has done pretty well in the current market. So that's basically one part of our service. It's not for everyone, you know, but it is a service that is available, and it's part of our Platinum membership. We'll move on to the next slide. Okay, Pat,
Some of our services, you know, we've spoken a lot about what we do, daily email, website, logging on to the website, looking at the recommendations. We also provide member webinars and podcasts where we have presenters on talking about stocks, talking about the market, talking about strategy, direction, and themes. So we offer a number of touch points for the investor. You know, some have a lot more time than others. Some like to watch the webinars, some like to listen to the podcast, maybe they listen to it on the weekend. Some like to read all the reports, some just skim the reports, some read all the daily emails, but you know, we have a number of ways that you can get value out of your membership. Member webinars, podcasts, we do midweek alerts. If we see a stock during the week that has moved significantly, or there's been an announcement out on, or there's been news on, we'll update members around that. Each Friday we do a market fat wrap, and we tie that to a theme and a cover, and we put the interesting highlights of the week in that. We run an income report that's very, very, very popular with the members. It gives them an idea of what an income report would look like. We've got a number of stocks in there for investors to look at, and those that are looking for some growth and income, because we know a lot of our clients are approaching retirement or getting to the point where they're looking for income streams. So I know, Ed, you talk a lot to the members about the income report.
Yeah, it's due to be updated again shortly, and we've also moved to daily stock updates. So at the bottom of our daily fat chat, if a stock has been updated, it'll be in there. If it's under Australian equities report or global equities or mining, it'll be updated daily. And then on a Sunday now, we send a summary to members, and we tell them which stocks have been updated in case they've missed it during the week. And all they've got to do is click on it. If they regularly click that box that keeps me logged in on the website, they can go straight to that report and get themselves updated. So this is a quick snapshot of our team, a couple of faces there, Angus and some of the guys, that the equity analysts and the account managers that I work with. A lot of these guys have been here for a long time, so it's really good for our members because they get to speak to the same person on a regular basis if needed, or get some questions answered. They can email them directly. It's all part of the account management service that I provide and our team provides to our members. So it's all part of what we do.
Okay, now over to how you join. I mean, obviously, we would like to welcome you as a member. We think that we, you know, 23 years in business, we think we can offer a lot of value to investors looking to position their portfolios, get more updated on the markets, get some confidence, and start investing some money in some stocks. And here we've got a number of packages that members can choose from. The standard membership we have here typically covers the strategy and direction, which we covered a lot in the very beginning of this presentation. So typically it's really just the daily email service that members get. But today on this special webcast, if you're interested in that standard membership to get the strategy and direction, but you also want to get added access to one of our reports, our either Australasian equities report, our mining report, or our global report, we will add one of those services to that standard membership for the price that we've got quoted here today. And maybe Ed, you could just talk a little bit about the pricing structure.
Yeah, so these are substantially reduced from our website prices. You know, a lot of new members just go to the website, they pay the retail price. For the standard, I think it's $13.95 a year. So it's half price basically on this webinar. So there's people here I've seen from 2005, first registered for a sample research report. There's a lot from 2009, 2010, some recently, October 2023. So it's a mixed range of investors on this webinar today. So we want to give you an incentive to join. Usually it comes down to price. Most people know they'll benefit from the research, but it usually just comes down to the annual fee. So it can be a tax deduction for investors personally or through their SMSF. So a lot of the membership renewals that I do myself are invoiced to the SMSF or a company name, and members can generally reimburse themselves on the card. So 1 year standard, quite generous today. We're going to add one of our reports, whether it's Australian equities or mining or global equities. You can add that standard. We've got 1 and 2 year options there. Most of our renewals are anywhere between 2 and 5 years. So generally long-term investors go for the 2 year option when they first join. You don't want to be paying money every 12 months. The 2 year premium is our most popular membership. That's substantially reduced, $1,200 a year from $1,995 and $1,900 for 2 years from $2,995 on the website. So it's a substantial reduction, brings it down to about $950 a year. And that's our most popular report. So you'll get Australian equities, you'll get mining, or you can replace that with global equities. Replace one of those, whether it's mining into global equities, it's member's choice. But you get 2 of our reports, and most people go for that because that covers the entire Australian market, daily, Australian and mining. And then platinum is basically, all the bells and whistles. You also get the account management service as well with premium and platinum. We've reduced that to $1,600 for 1 year and $2,300 for 2 years. That's quite low, and that brings it down to $1,150 a year. So we've got a poll up there. If you're interested in joining or you just like to speak to us about the membership, just click on the membership that you're interested in, whether it's standard, premium, platinum. If you're interested in a portfolio review, click that as well, and we can discuss that at the time of joining. But yeah, we always look forward to welcoming new members through these webinars. We give you a snapshot of a service. I hope we've explained it as much as we can today of what you'll get on a daily basis, but the daily report now is the main report. It covers everything that you need to know and need to have for that particular day, and also the stocks. As soon as they're reviewed by the analysts, they're updated daily as well. So that's the poll there, Pat.
I think we'll just leave it there for a little bit. I mean, obviously, premium is the one that we get most new investors on, because as you said, Ed, it gives them the market direction, strategy. If they take the 2 reports, it gives them, full coverage of the Australian market, both for the industrials and the mining stocks. But if somebody wants more international diversification, they may take the global equities, or if they go over to platinum, they can get them all. So we'll just leave that poll up. We got a few people clicking, so we'll leave that up for a couple seconds.
The account management service, Pat, which is obviously what I do, that's my job. on top of doing these webinars occasionally. But a big reason members stay with us long term, they build a relationship with us over a long period of time. And they, I get emails every day from members just asking questions randomly. I might not hear from a member for 6 months. Then all of a sudden there's a price drop on the stock, or they're thinking of buying a stock. They'll send me an email, say, Ed, what do you think? I've been having a look at this stock for a while. I'm thinking of buying, or I've got some substantial profits there. I'm thinking of selling. So the account management service, the dedicated account manager with the premium and platinum, is one of the main reasons why members have been with us for so long.
Okay, and we are getting quite a few clicks on the premium, so I think members or investors are seeing the value in that. I think we've had enough time on the poll. I'm going to close that now. Fat Profits reasons to join. Ed, we'll go through a few things. I think we've touched on performance. Obviously, we've been in business for 23 years. Our performance has been quite good. Again, disclaimer at the beginning, past performance is no indication of future performance, so please be reminded of that. So we tick the box there. Save time on research. You know, we do a lot of the back end work. We try to present the information in a very easy way to read. As we mentioned earlier, we give you a lot of touch points and ways that you can consume the content and recommendations that we do, whether that be through the daily email, whether that be through browsing the website and reading the recommendations, joining us for a webinar, whether that's live webinar or watching the recording, listening to the podcast at some point in time when you have time, looking at the summary fat wrap at the end of the week. So, you know, we're going to save you time. We're going to give you a lot of ways that you can get value out of the service, and you can choose how you want to use it. We've got experience in reputable management. A lot of us have been with the company for quite a long period of time, as Ed mentioned earlier. Myself about 21 years. Ed probably about 13. So both him and I have been here quite a long period of time. We don't get every recommendation right, but we tend to get more right than we get wrong. So, you know, that's the name of the game. Obviously, if we got them all right, we wouldn't be talking on this this webinar today. But Ed, maybe you can touch on the next couple points, please.
Yeah, so that's actually a brief summary. So a lot of members do join for the first time off these webinars, and sometimes they've been on the database for over 10 years, some even longer. But everyone has, it's a bit like stocks, it's time in the market. You know, we've got members that leave and for some reason they buy a house or, you know, retire or whatever, and all of a sudden they're back into investing, so they come back on board, and they usually they come back for an invitation on one of these webinars, and they want to get the research again, so they'll come back. So it's all about time in the market. People generally buy research when they need it, when they're looking to do some investing, or when they're looking to improve their returns. And that's another big reason why members join. I hear so many hard luck stories of members that have tried other services and for whatever reason have lost a lot of money, and they just want to change their angle and their game and their performance and try and start making some money again. So they try us out, and most of them, thank goodness, they stay with us after that. But look, you can't make any money on the sidelines. I get a lot of members at the moment that I'm hearing, oh, I'm on the sidelines, I'm waiting. But you know, you can't make any money on the sidelines. So you're either investing or you're not. And even if you're not investing, it's good to keep yourself up to date with research, keep yourself educated and informed, so that when you do start investing, you go and make your own decisions. You know, you set up an online broker, you buy your own stocks, you manage it yourself. You go into retirement, you set up an SMSF, you manage that yourself, which is what most of our members do, and save on all those broker fees and management fees that, you know, really in this inflationary environment, you don't really want to be paying, to be honest. There's some reviews there from members. You know, I review companies that I use, like Telstra and Optus. We don't want to send Optus a review at the moment, but anyway, and other products and services that we use. And we generally, you know, if I put something on my map on Google and I go to this restaurant, they'll send me a message, oh, can you leave a review? And you know, we do all of that. So yeah, we've had a lot of reviews there, 376. I'm not sure if that's accurate, but that's a lot. But yeah, we've had some fantastic reviews from some of our loyal members. They've done this for us. I don't know who they are. All they do is put their name there and a star rating, which is great. But you can always go on product review and read some of those reviews. That's fantastic. So the testimonials are a cornerstone of our service as well. So are you ready for the opportunities ahead? You know, you can look back to learn how to look forward. Joe Gerard. There you go. That's a famous quote. So we'll wrap that up now with the final subscription offer, Pat. You know, we've reduced them again. It's all there just in case you missed the poll previously. You know, you can try us out for a year or a couple of years. We'll put the poll back up very quickly. Standard, premium, platinum, or portfolio review. Happy to answer questions. We've also got an email address, info@fatprofits, profits as in biblical, prophets.com.au. Send us some questions about what you've experienced today. If you'd like to provide some feedback, we're happy to welcome that as well. If you'd like to discuss the membership, put that in the question at info@fatprofits.com.au, or just click one of these options and we'll get back to you. And hopefully we'll welcome some new members on board, Pat.
Okay. I think we've covered a lot, and I think it's been a very good presentation. I think it's time for question and answers. So again, Ed mentioned you could type in some questions, send them to us, send us questions to info@fatprofits.com.au. Feel free to give us a call at any time, 1-300-88-11-77. We do have real people here in the office. You can talk to us. We think it's important that we provide that service and we provide that touch point to new investors who probably are going to have some questions around some of the things that we're talking about. So we do encourage you to call us, pick up the phone, give us a call, and we hope we can welcome you as a member to Fat Profits after 23 years in business. I think we'll end it there. Ed, I'd like to thank you for your time. I think it's been a good presentation. We hope investors got some value out of this. If they don't join, at least maybe they got some more information about how Fat Profits could help them. And if they're not ready to join today, maybe they'll join us at some other time in the future. So Ed, I'll think we'll end it there. And
thank you,
thank everybody for joining. And bye for now.
Thank you. Have a great day.